Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I am recording from the Delta Lounge in Indianapolis before Indy Tech. So if things move around in the background, that's why. So my apologies on that, but at least I'm pretty confident my sound is good because I've got an amazing microphone that I use for recording when I'm traveling. Today I have with me Tim Maloney and Stephen Romero, co-founders at Pre-Loss. Tim and Stephen, first of all, thank you for joining me today. How's it going?
Going very well. And we opened our doors. I said we opened our doors. We started building out the company July 29th of this year, 2024. So we've been busy, and some of the busy has been going to you, Tony, and saying, hey, who can build a website? You introduced us to Max and Lance over at Motive Engage. Great guys, really enjoyed working with them. And Brett McKenzie at Coverse. Again, thank you, Tony, for connecting us with some of the people that are really helping us out.
Awesome. Both of those are fantastic. And yeah, anything we can do to help the entrepreneur community within our insurance and insurtech world, more than happy to. I mean, I'm glad that that's working out.
Thank you for letting us be here, Tony. Thank you for letting us be.
Yes, absolutely.
Awesome. So both of you are fellow CPCUs. So it is always awesome on the show to have real insurance people, not just tech people trying to play in the insurance space, which is sometimes the case for insurtechs. And not only CPCUs, but CPCUs and a whole bunch of other designations, and long-time insurance people. So we always give the guests the chance to give the elevator pitch. What is pre-loss?
Well, Tony, pre-loss is where the geospatial and P&C worlds collide. We're an inspection solution. We provide baseline scans, which is something that historically the insurance industry has not done. What that means is historically, and we focus on large commercial assets, and Stephen and I have handled billions and billions of dollars worth of claims together, and we've audited those claims. And what we find is the ambiguity, the gray area is, costing in some instances tens of millions of dollars on individual or single claims. The ambiguity is with no baseline. If we have, Chip Merlin over here, Steve Badger over here, plaintiff attorney, defense attorney, Chip says, I think we should start measuring from here. Steve says, I think we should start measuring from here. Where should we measure from? We don't know because there's no baseline, there's no measurement to measure against that's created. And that's what we're doing is we're providing digital replicas, digital twins that give us something where if we need to measure from here where Chip says, we can do that. If we need to measure from here where Steve says, we can, do that because that's exactly, where the baseline is. We have something to measure against for claims. You're muted, I think.
So basically, in layman's terms, as I'm trying to think through it, basically a 3D scan of any commercial building.
Yes, a digital twin of the asset. Yes, essentially.
All right, and done at the underwriting stage.
So we provide the baseline that can be utilized for underwriting purposes or claims purposes. The baseline can be used to measure against during any event, whether it's attritional, catastrophic. So essentially the baseline is used as a validation tool for inspections. But yes, it can be utilized for underwriting. It can also be used for claims. There's a lot of benefits to it.
Okay. So basically the client that you're helping is owners of commercial real estate portfolios.
Well, I say we're an asset Rosetta Stone. And what I mean by that is the P&C space, there's certain programs that we can get written into where we're able to provide this baseline scan to help the P&C space. If the contractor that's doing work, they can refer to the same, Rosetta Stone. It's really good when you have lexicon differences, architects, engineers, contractors, adjusters, but they can all use the same digital twin technology, and it's a great translator.
Okay. How does the process work for each building?
So the exterior, well, as we're going through proof of concept, we're delicate with a lot of the ingredients to the secret sauce, right? Because we're trying to make sure that we have the right iterations. There's different technologies that we utilize for drones, for the exteriors. So a lot of times we're using the envelope and the exterior facades, and that information is captured by drones. Some of the common areas, some of the ground information, and some of the interiors are captured by terrestrial scanners and/or SLAM scanners. Essentially, we are using point cloud, we're using photogrammetry, we're using thermal imagery. So there's a lot of different data that we're collecting, and essentially we mesh that together into these digital twins, into these dollhouse iterations, if you will. And then we customize those with point of interest that are driven for compliance purposes, for underwriting, and for claims, and for appraisals within real estate. And of course, there's the building information models within construction. So we target different vast audiences with a validation tool. So essentially, we have some intelligence behind the digital twins in the form of AI and algorithms that are self-teaching and self-learning. So as we take these standard operating procedures and these workflows and we put them into the algorithms, we're able to automate and augmentate the process.
Tony, if I may, one of the things that we do, in life insurance, that I think life insurance has a little bit better than the P&C space. If you go out and get a $25,000 life insurance policy, nobody's asking you any questions. Then you get up to a $50,000, still no questions. $250,000, we need you to take a blood test. We get up to $1 million and more. They might do some more exploratory stuff that we won't talk about on the podcast. But what they've done is they figured out as the dollar amount goes up with the exposure, what they might end up paying, they do more and more. And we believe that the P&C space doesn't do this very well. I believe that the P&C space focuses on symptom relief. And when I say symptom relief, let's assume you have a hip problem. And because of that right hip problem, you've got a lot of pain in your left knee. So the P&C space says, okay, your left knee hurts, let's treat that. So we go out, we have a hurricane, and the P&C space says, we thought we'd pay this much money out on this type of event. Instead, we paid this much money out. So symptom relief says, okay, let's raise the premiums, let's raise the deductibles, and let's restrict coverage. It's a black eye on the industry, in my opinion. What we're advocating for is let's quit focusing on the symptom relief. Let's focus on the root cause. As Stephen and I have audited billions and billions of dollars worth of claim, we've dug into, the 4 or 5 points where the money is spent. Not just how much money is spent, but the categories on these commercial assets where the money is spent. So when we did that, we broke it down. I'm like, okay, what's the solution? How do we solve this issue? So we dug into, and we've been working on a program and a solution to where we can get to the root cause. The root cause is the ambiguity. The ambiguity is the problem. And we need to establish that baseline that we talk about using the digital twin so that when we get to the litigated part or the dispute, then we have something to measure against. We don't currently have that.
Okay, so
our inspection is absolutely used as a validation tool, right? It supports and justifies a lot of these scopes and many of the valuations as well. So there's just it's a great validation tool.
One of Stephen's quotes is, it's not a claims thing, it's not an underwriting thing, it's an everything, or it's just an everything, right?
Mm-hmm. It's just not for claims, it's just not for underwriting, it's for everything.
Having done both claims, having done both claims on underwriting, although claims I I did in very small claims. Underwriting, I did middle market. But I can definitely see how in a perfect world we'd love to have a perfect representation of the pre-loss state. That definitely makes us all of our jobs better and much more exact. Why hasn't this been done before?
You know, the funny thing, you should ask that, because a lot of people that we're talking to, you know, are asking the same question, because it's so simple. Is it, you know, right under our noses. Some of the pushback that we've had, and so Stephen and I, in working through this, we've talked to insurance commissioners, we've talked to reinsurance brokers, we've talked to everybody that we can, and we've gone out and picked our friends in the space that are not bashful. They beat up on us. Stephen and I have lost a few fights along the way, but they said, you're going in the right direction, but good luck with the underwriters. So, you know, I went back to the table and said, okay, underwriters. So what I started focusing on is, how do we sell it to the underwriters? And what we've been able to do is cut the underwriters' time in half. We've figured out some solutions to where we're able to make them more productive, more efficient, and more accurate. Since we're doing the digital twin on site, we're not having to go to the various websites, won't mention companies, where people go and get information, but it's not exact. It's good information. The aerial, the satellites, the aerial imagery are one level. But when you're creating a digital twin on site, it's a lot more accurate. It's a lot more exact. Why hasn't it been done? We believe the P&C space is slow to adopt. You know, we move patiently, we move slowly. We let somebody else break it and fix it, and break it and fix it. And once it gets to a certain point, we'll adopt it when they've moved on to the next technology. So Stephen and I have spent a lot of time with the faster to adopt spaces, you know, the geospatial world, the oil and gas, the manufacturing, and a lot of the technology that we're bringing to the P&C world is borrowed and vetted from other sectors. It's not something new. It's just a new use for it.
That's right, Tony. I mean, it does exist. It's just not being utilized within the P&C space, right? The technology exists. A lot of it, Tim and I are having to repurpose it because of the subject matter expertise, right? There's a great iteration, a great deliverable, but we're looking at it like, hey, you can't monetize with that because it's not a billable item just yet. It needs to be customized. And so, yeah, we've understood that, hey, look, Tim and I speak underwriting fluently. We speak claims fluently. We've run large loss divisions and litigation divisions, so we understand the exposures. So with the right focus, yeah, we can find this to be a great tool for validation to set that baseline that can be measured against during any event.
And the tool that we're using right now, Tony, if we go back to pre-COVID, you know, we're talking Zoom, we're talking Microsoft Teams, Google, GoToMeet, you know, people are like, I like to meet in person. And all of a sudden we were forced to start using this tool. And, you know, and I kind of think of it as the same way. You know, people are like, you know, we don't want change. But Tony, you like change, you like innovation, you like technology. And we believe that this is the technology, this is the way, you know, and that's kind of for Brett at Coverse, because she likes Star Wars. So this is the way comment. If you look on when we get to our website, if you look at the ... after this is the way on the front page, I said, let's space that out, because it reads like the Star Wars movies, how you see all of the language coming in the beginning. So I want to make sure that I frame that for Brett, because so she'll get a kick out of us mentioning her in Star Wars. So.
Okay. How are the how is the industry reacting to this offering?
Well, when we show the scans and show what we have done, it's always well received. Now, we've shown people, and we've been, you know, kind of test driving this, and, you know, and the feedback from various, you know, people in the space that we respect. and they're like, wow, you're onto something. You know, one of the people that's beat up on us, you know, I'll give Lisa Miller and Stephen Badger, you know, they both beat up on us, kicked us. We lost the first couple rounds to them, but we've come back and now, you know, Badger's like, wow, okay, I think you guys have something here that I haven't seen. And some of that's some secret sauce that I'm not going to reveal here. It's a tool, it's underwriter, it's a way to sell it to underwriters. And we have a lot of people telling us, good luck with that. We've tried to sell it. Well, you know, Stephen and I, we've come up with some ways to deliver this message to underwriters that we think that they will you know, enjoy and appreciate. But you know, we're going to keep that a little quiet now because we're still, we talked about stealth mode earlier. We're still flying under the radar on that type of stuff.
So some of the other good benefits, as you mentioned, hey, you asked us who we were targeting. As we shift our focus from the carrier's perspective and how it benefits them, because, you know, it does have so many benefits as far as, you know, providing claims and a lot of statute relief, you know, where they have compliance for 60-day turnarounds and whatnot. So as far as cycle times, there's a lot of benefit to it. As far as impacting loss runs in a positive way, that's very impactful. So when you talk about your ELRs, your estimated loss ratios, your targeted estimated loss ratios, your maximum estimated loss ratios, that's how you impact your modeling. So a lot of this more robust and accurate information does actually impact their books of business in a very positive way. And so with that being said, a lot of our broker friends and agents and producers, as we have these similar conversations, we're having them understand how they can grow their books of business in a hard market, as we have been dealing with, by ensuring that each asset is insured to proper valuation. And so by validation, right? It's a great inspection and powerful tool for inspection, but it validates what the conditions of these assets are pre-loss, establishing that baseline. So brokers are able to understand, hey, we can grow our book of business in a confident manner while there's a hard market. And then, of course, in turn, being that we have so many incentives, we offer a solution, right, for all these things. So during the market, as it softens up, we're kind of saying, hey, our program is so incentivized. Why wouldn't you opt into it? You know, because we have endorsements that, you know, nominate us into the policies.
You know, we get into a relationship game with the brokers, and some, you know, some people have some concerns, you know, hey, this is, you know, where we believe bringing structured data to the P&C environment, especially the first party environment, is going to be healthy. You know, there's some people that resist change, but over time, we think dealing with, you know, the facts, dealing with, you know, the baseline, establishing some things is going to be healthy overall. I believe I have what I talk about is the P&C space with the symptom relief. It gets a little bit of a black eye, and it's because, you know, everybody, the consumers see the policy, the premiums go up, the deductibles go up, and less coverage. And, you know, and we think that can be, we can combat that, and we can bring the P&C space back to focusing more on attempting or trying to put people back in the condition they were in prior to the loss, less their deductible, so that, you know, that's the hope, that we can get away from this restricted coverage, and because we're going to be able to bring back more facts to the claims process.
I've never been a broker, but I would think that if you're a broker that does a lot of commercial property, it would be a no-brainer, right? It would be a great differentiator.
Mm-hmm.
And talk about sleeping better when you know that your valuable clients, in case of a loss, have every
That's right. Tony, I tease ourselves and say we're like G.I. Joe, where knowing's half the battle. And this is why, right? Because you can set expectations that are realistic. You can remove any kind of sense of entitlement, right? So there's just there's a meaningful tool behind validation, right? And so you're speaking volumes behind it, because it just lessens the ambiguity, right? It just kind of provides that confidence behind everyone for dispute resolution, right? If there is any, it just provides that expectation that's realistic for everyone.
And a lot of times, you know, Stephen and I have handled, you know, a lot of dollars in claims. And you get to a dispute, and sometimes nobody knows the real answer. Was this event related? Was it not event related? I don't know. Yeah, you know, my default always is give them the benefit of doubt. But even giving the benefit of doubt, sometimes you still have a dispute. Having something to measure against makes it easier on everybody, even if what you're seeing isn't exactly what you wanted to see.
And dispute resolution, they always say you want to make sure you're ensuring you're taking the right steps on the path towards resolution, right? And this is just taking leaps and bounds towards that resolution path, right? This is just saying, look, let's, instead of our deltas being so far between the carriers and the insureds, let's having something that's a value add for everyone involved. And so we've talked about some of the benefits for the carriers and from the brokers and agents perspective, but some of the values from the policyholders perspective are really fun and really profound. As we're validating, we're providing more robust and accurate information so we can work with the brokers so they can provide to the underwriters. And many times we're able to provide a rationale for premium relief or a rationale for, you know, help with reserve studies, you know, so there's a lot of benefits to being efficient, you know, and being resilient, ready. So essentially that's our big focus.
Yeah, I would think much faster claims resolutions, and much more accurate, which is a win for everybody.
Yes, sir.
Well, you know, and we'll tell you, we'll add another layer to it because there's in Florida, you know, it's a state that's impacted by a lot of large hurricanes. In fact, we have a hurricane in the Gulf that looks like it's going to impact Florida. You know, this happens a lot. One issue that you get, let's say if a hurricane hits Tampa, Florida, there is no way in the world that the building officials can handle all of the volume. So when Stephen and I, you know, one hurricane, you know, I won't mention which hurricane and what location, but we were talking to the building, the managers and their contractor, and they're asking Stephen, well, when's the payment going to get out? And Stephen's asking them, well, when are we going to get your final set of numbers in this agreed upon scope? And the contractor said, well, I've been waiting. I have turned this in 6 months ago to the building official, and that's how far backlogged they were. So one of the things in some instances, in some areas, you know, having a digital twin is going to allow some of these contractors to work with the building officials and expedite things. You know, hey, this is simple. Can we get something on this, as opposed to the building official to having to go out to the site and look at certain things. So it's a tool that can be used to speed up the process, even when it's not related to the adjuster and somebody else. It's, you know, it can speed things up for the building officials as well.
Since it's new, you might not yet have really good answers for this, but what are you visualizing when it comes to pricing and implementation?
We have, you know, what we've attempted to do, and we've gotten into, you know, building each revenue stream and what we're doing into a building plan so that we can have some pro formas. And we have different types of scans for different types of situations. We'll say Main Street, commercial, retail, pretty open area. You know, we do have pricing that's fairly simplified. In some instances, we're only looking to capture the building envelope, so we're able to, you know, that pricing is going to be different than an interior scan. And then when we combine the two, the interior and exterior scan for large buildings, you know, we've got some pricing for that, but a lot of that's going to be custom, where we will send budgets over for those individuals. Additionally, we have programs where we're, you know, written into, you know, policies and written into contracts where, you know, these various policyholders, condo associations, you know, they're having some difficulty with their reserve studies. And if you look at statute 718 in Florida, you know, there's certain requirements for structural integrity reserve studies. So for that, we have the ability to work with the reserve study group and you know, and help them. So working in tandem with the reserve study experts is, that pricing will be different as well. So we've got quite a few iterations that, is customized pricing, and we have some fairly to deliver pricing, on building envelope scans.
All right. Very, very exciting stuff.
Even if you simplify it way down, Tony, you can talk about a lot of times how maybe people put their units, for the individual condo unit owners. A lot of times those policyholders will maybe, hire someone to put their unit on Zillow or Realtor.com or Airbnb. We have those simple scans as well. I mean, so we have very complicated, intelligent digital twins driven by self-teaching, self-learning AI and algorithms. And then we can dumb it all the way down just to a simple 2D scan, just for kind of marketing material, if you will.
Yeah, we're having fun with the AI, Tony, and we're touching on it lightly because we found some pretty profound solutions, but with buildings, the various materials, the various types of damage to those various materials, there's a lot that goes into machine learning and teaching the algorithms for the AI. So we have some things that we could, immediately apply AI to, and it will recognize various conditions. But that's something that, we're not ready to fully peel back the conversation on that. Although certain assets we can apply AI to, and it's pretty cool. Yeah.
Awesome. I'm always curious on the origin story, and if you both come from the claim side, but yeah, how did the idea happen, and you guys decided that you were the right people, it was the right time to actually make it a reality?
Yes. So I've been nominated to a big book of business for a big, large insurance carrier. Oops, sorry. Sorry about that.
Picture for
Yes, essentially, with that responsibility, I just kind of started to really understand the responsibilities and the liabilities within the terms and conditions of the policy. So with that being said, you can invoke the right to repair investigation process if you are validating that there are fraudulent activities or just questionable parties, or maybe a bad risk, a lot of different variables, right? So at the end of the day, it's a very negative term, but it's one of those situations where if I can kind of explain the situation, it's more of, if you had an automobile accident and you're on the phone with your adjuster, and the adjuster says, take the vehicle to the body shop of your choice for the repairs. He's empowering you because of that language within the policy, right? The policy's terms and conditions. Well, technically, the insurance carrier can actually invoke the right to repair to say, you will take it to the body shop of my choice, right? And so it's the same idea and concept. I found some fraudulent activity. I felt like the contractor and the board and the condo association managers, all the parties involved, were up to no good. So as it's my job to validate, I found that, I think I'm going to have to invoke the right to repair investigation process, which means I had to bring in my own experts, my own engineers, my own contractors, which also means I had to assume the liability, right? So that's why everybody says, why doesn't every insurance company do that? Well, hold on, because if you haven't provided that baseline to measure against, you've assumed the liability. And many times we don't know what we're dealing with because of the ambiguity that's allowed during the underwriting and binding inspections, right? We're not validating the conditions of the risk. And so therefore, we're not sharing the risk as we should. So as we're not validating the condition of the asset, it leaves exposure. So as I would handle these files, of course, I'm a large loss specialist, but I'm also a litigation specialist. So I can play claims chess to understand how these things are going to fold out. So when I have to report back to the carriers, I'm like, yikes, let's get the actuaries on a call because this one's not going to be good, right? So there's just interesting conversations that have happened over the years. And with my man and I, as we've uncovered and discovered and validated good actors versus bad actors, good risks versus bad risks, risk share potentials, quota share potential, all these different variables, we've understood that, if we can build a specific program that is incentivized from the ground up with nothing but solutions, that's where we want to be. That's where we want to wake up, because that's where our passion is. Because we've had these conversations with people from the ground up, like Tim mentioned. There's been building officials to contractors to politicians to you name it, from high level to low level. And we've gotten their perspectives. And at the end of the day, even though we've shared questions and then answers, sometimes we've gone back and said, those answers aren't good enough. We want solutions. And so we're proud of ourselves because we do feel like we are a solution-driven type of firm, and we're bringing a market disruptor to something that's been asleep for a long time. But we're forcing everyone to kind of lift up their head and pay attention, because as the market shifts from a hard market to a soft, we're bringing the inspection solution that can kind of revolutionize what we're doing and validate how we're doing it.
So Stephen is working on these problems from his perspective, in claims, and I'm been geeking out to all of these posts by Michael Gula, and Eric with S3, and all of my friends in the geospatial world, and Lynn with Mosaic, and I'm watching this. I don't understand it. I don't know it, but for a few years I'm following and tracking this. So when Stephen comes to me with his vision, his problem, his potential solution, I said, you know what? I think we could create a baseline with digital twins. I don't know anything about digital twins, but they're really cool. So we've been studying this for 3 years, and all of a sudden, when you ask us questions about geospatial and GIS and RTK and point cloud and LiDAR, all of a sudden, we sound like we know what we're talking about. So then we kind of took the geospatial, the P&C headaches, and we kind of merged them. And if you look at our logo, I like to tell the story through the logo, and I always want the logo to tell a story. So we have 2 different colors. We have one representing the geospatial world, one representing the P&C world, and when they collide, we end up, that's our logo. That's what it represents. And we also have, so we have a lot of different things, as well as the geospatial in the P&C world. When you have digital twins, you have a replica of the other. So, we've got a mirror, so this also represents the actual asset and the digital asset. So, as we're putting this logo together, the thought process is I want to be able to tell our story through our logo. And that's what you see. And then that's our story.
Beautiful. This has been super interesting. It's awesome to see what it looks like sci-fi tech compared to what I grew up with even just 10 years ago. It's good to see, really awesome to see this making its way into the P&C industry. And eliminating that ambiguity on large property losses is a win for everybody. So thank you so much for your time today. I look forward to have you guys on the show a year or 2 years down the road to talk about the effects that it's had in the industry. Thank you so much.
Hey, thank you, Tony, for having us.
Thank you, Tony.
Have a good day.